market. So for us, and the trend that you see here, options are really the X-ray of the financial market, right? So most retail traders, they look at option and they think it's a side hustle, maybe it's really something to use for fun, to generate some income on the side, but they don't look at options like institutions do. But for professionals, for hedge funds, options really are like an X-ray machine. Options tells us where the big players are positioned. They tell us where market makers are forced to be hedged, and they tell us how the market is pricing in fear, aggression, or complacency. So options can really be a very, very important sentiment or barometer for what's going on in the market. So for example, when a stock sits on a major gamma wall, market makers may be forced to buy or sell into the moves, right? And they can create predictable zones of support and resistance. Again, this is forward-looking information. It's not looking at past price action. It's actually looking at forward-looking data. If we're looking at a skew, for example, and we see a sudden rise in the put skew, that can be a fear signal. So someone is looking to pay more for protecting for a downside move. So that can tell us a lot on what's going on in the institutional world. And also very, very important, we need to look at option expirations because they can trigger volatility as all these positions unwind. So we are going to come close to our OPEX, option expiration, weekly expiration, daily expiration. Very, very important to take a look at this information, and we're going to show you also how you can see that within the platform. So at MenthorQ, we make this data accessible to everyone. We map gamma exposure intraday and end of day. We show you how the skew shifts and how the volatility surface change. And we also deliver models that can help you interpret the data into actionable zones, right? So if you're ignoring like option data, it's kind of like trading blind because you're missing a lot of the information that are key to understand why the price moves so fast during the day. So today we're going to show you also how you can use those data points, even if you are not trading options at all. Now let's go into how hedge funds or institutions are using options. So hedge funds, they don't chase prices, they manage risk, and they think in terms of exposure, regime, and positioning. So they are constantly asked the following question: are we in a calm market or are we in a volatile environment? Are we in a risk-on or risk-off environment? And where are the other players' positions, right? So for them, options play a big role because they can hedge against losses using options. They can bet on volatility, and they can read the crowd and the flow by looking at the option market. So this approach is systematic, is not emotional, and they allocate based on probabilities and risk rewards. Again, they're not looking at charts, they're not looking at chart pattern, they're looking at risk management, positioning, and flow. Can the retail traders think in the same way? Can you build an edge with the limited tools that retail traders have? And with the right models and structure? Absolutely. And today we're going to show you some of these tools as well.